Welcome everybody to another QB Power Hour. Our topic for today is e-commerce and sales tax challenges post-Wayfair ruling. If you've been paying attention, you probably heard about some changes to the sales tax laws. You may not know that it's called the Wayfair ruling, but you knew or heard about some recent sales tax law changes. You're going to learn all about that today. We're going to tell you a little bit about the QB Power Hour, our sponsors and hosts, the CPE process, and then our content and learning objectives for today. We're going to help you to understand how sales tax and economic nexus worked after the Quill Corporation versus North Dakota ruling and before this latest Wayfair ruling, help you understand the impact of the Wayfair case, and also show you how Avalara software and their services helps alleviate the challenges of calculating and remitting sales tax. So a little bit about QB Power Hour. We usually do this every other week, every other Thursday, so about twice a month. Next week on next session on September 6th, we're going to be having Hector talk about what's new in QuickBooks Desktop. And then also just to let you know, we usually talk about tips, tricks, and advanced insights on QuickBooks. Today, as you know, we're talking specifically about sales taxes. And we have some special guests with us, Patty Sharp, who is an e-commerce guru and has a lot of knowledge and expertise in this area, as well as Matt from Avalara are going to help you with this. My name is Michelle Long. I am a CPA, the owner of Long for Success, a trainer for Intuit, and absolutely love it. I'm thrilled to be back in the United States. I was in Russia on a 2-week Viking cruise for the past 2 weeks, and I can tell you the food, I'm really glad to be home. The good news is I did not gain weight on a cruise. So that's a little bit about me. Hector Garcia is my wonderful partner. He is located in Miami, Florida, and he is traveling today to attend a conference. So I appreciate Hector covering for me while I was on vacation and all the work that he did to get this arranged today. So on the CPE process, you must attend this live. If you are watching this on YouTube after the fact, you are not eligible for CPE. You must be logged in for at least 50 minutes. You need to answer 3 of the poll questions. So we're going to have more than that, but you have to answer at least 3, and then allow about 3 weeks for those CPE certificates to be emailed to you. We'd like to thank Avalara, who's not only a guest with us today, but they are one of our sponsors. They are the most popular app and service to help manage multi-state sales tax compliance. They really make it easy, and it's done right. So check out Avalara. They are amazing. So I'm very thrilled to have Patty Sharp. She is amazing. She's going to be helping us today, so I'm going to go ahead and pass the presenter to Patty. There you go, Patty. And while we're doing this, I'm going to go ahead and launch our first poll question. So first of all, before Patty starts, let's ask you if you know what economic nexus is. How many of you know what nexus is? So go ahead and answer that poll question and we will get going. I have uploaded a couple of handouts for today. I've got one more from Avalara that I'm trying to get uploaded, but it was giving me an error message. So I will work on that while Patty is talking on getting that uploaded there. So give me just a couple minutes to get the handout there. Somebody else says the handout will not open. Try downloading that, and then you should be able to open that with a PDF reader. All right, Patty, do we have you on here?
Yep, I'm ready to go.
Awesome. All right, so would you like to go ahead and answer this poll question, or I'm sorry, introduce yourself while we let people answer this poll questions for a few more seconds?
Sure. So I'm Patty Sharp. I'm a CPA, and I'm the co-founder of Catching Clouds. We've been doing e-commerce. I think we got our first e-commerce client in the early 2012, and we've been e-commerce only since 2014, early 2014. So we've been doing this a long time, and sales tax has definitely been one of the biggest pain points for our clients, and Wayfair didn't really help too much.
Awesome. Well, thank you, Patty. I'm going to go ahead and share these poll results with you all real quickly. So you can see, Patty, a lot of people don't know what nexus are. So I'm really glad to have you guys joining us today. Patty and Matt both are going to help you to learn more about this because there is a complicated area, and it has gotten more complicated, as Patty kind of alluded to. All right, I'm going to hide the poll question. And Patty, I tried to make you presenter. Do you have that? Because we're not seeing your screen. Did you click to share? Oh, there you go. Now we're seeing your screen. All right, okay. Patty, take it away.
Okay, so let's get this puppy started. Sales tax. Most of what I'm going to be talking about is Nexus. So I just want to make sure that everybody understands that just because you have Nexus, so Nexus is a sufficient business presence in a particular jurisdiction. Okay, so that's all we're going to be talking about for the bulk of my talk. But just because you have Nexus doesn't necessarily mean that you're going to have to charge sales tax, collect sales tax, all that. There are other factors that are involved. So like if you're wholesale, the people who are buying from you, you won't have to collect sales tax from them, yada, yada. We're not going to go into all of this now because there's too much to talk about with Nexus. So let's just hop in. I just want to kind of have you guys have this in the back of your mind. Okay, so before the Supreme Court ruling on South Dakota versus Wayfair, which we'll talk about in just a second, Quill Corporation, that was the rule of the land. Whenever you hear anybody talking about Quill, this is what they're talking about. And what happened was there was a court case between Quill Corporation and North Dakota. And North Dakota was basically like, hey, you're selling stuff through mail order in our state, you need to collect sales tax. And Quill was like, no, I don't, because we don't have any kind of ties to your state. We're not in there. Our business is in another state. So they took it to court. And what ended up happening was the ruling on that created what has become kind of the rule of the land ever since 1992. What they said is that Nexus is determined by physical presence. So things like having property in a state, having employees in a state, having salespeople there. If you have these things in a particular jurisdiction, then you have Nexus. And if you have Nexus, then you should be registering to collect sales tax and then collecting and remitting it to the state, filing sales tax returns, and all of that, okay? And all was well and good for a couple of years. And then in 1995, Amazon showed up, and so did eBay. And when these showed up, really it was the advent of e-commerce business. And for those of you who actually, let me talk about this. So while we're talking about Amazon, there is Amazon fulfilled by merchant versus Amazon fulfilled by Amazon. And this is really kind of where all of the trouble started. Amazon sells products, as everybody knows, everybody buys on Amazon, but at least half of their revenue is coming from a bunch of independent sellers, a bunch of mom and pop stores who are basically selling their products on the Amazon marketplace. So they'll put a listing on there, and fulfilled by merchant means that those small businesses are actually shipping out their products, okay? Amazon FBA, fulfilled by Amazon, is Amazon is taking responsibility for those products. So all these little sellers, they're like, hey, this is a quick and easy way to get my business going. I will send all of my products to Amazon, and then Amazon will store the products. They will list it on their website. If somebody buys from them, then they will actually ship it out to the customers. So it's a great deal, and Amazon charges through the nose for this service. But what happened, which I think was an unintended consequence, is because Amazon had all these products, they were storing it in all of their different warehouses all over the country. So now, because all these small businesses have their products spread out over the country, they now have inventory, which is property, which is creating Nexus, excuse me, in all these different locations. So right now, Amazon has warehouses in 26 states. It's continuing to grow. So what was happening was you would see a lot of small businesses saying, hey, I'm not going to charge sales tax to my customers because I'm too small. This just doesn't make sense. And a lot of people were saying, hey, I can't charge sales tax because nobody on the internet is charging sales tax, and I'm going to lose sales if I try to collect sales tax from my customers. They're just going to abandon the cart and go buy from somebody else. So what was happening was a lot of the states, as e-commerce started to grow in popularity, and the brick and mortar stores were kind of losing sales, the states were losing revenue. And they didn't like this too much. So in 2008, this started in New York, they said, we need to come up with a new way of generating some revenue. And you know what? When you have affiliates in other, like if you're, let's say you're in New York and you've got people who are selling your products for you through like an affiliate program. So what an affiliate program is basically somebody puts a little a link on their website. Amazon was notorious for this. So you put a link of a picture of a book or something on your website, and somebody clicks on that link and they buy the book through your website, then Amazon will pay the person who had the website a little bit of a commission for helping to increase their sales. So this is the affiliate program. And what the states were arguing was, hey, these affiliates are actually salespeople. So if you've got salespeople in these different states, then that creates nexus. And if there's nexus, then I'm gonna, you should be collecting and remitting sales tax. Well, Amazon, they learned about this. So what happened was Colorado said, hey, we're going to have this click-through nexus. If you have affiliates and an affiliate program and you're paying people who are in Colorado, you need to be collecting and remitting sales tax for anybody who's buying from you who's in Colorado. And Amazon said, oh yeah? No, we don't. They canceled their affiliate program in Colorado, said, you can't be an affiliate of ours if you're in Colorado, and we're not going to collect and remit sales tax. So this was in 2010. So you're seeing kind of the back and forth of what's going on here, the push and pull. So as e-commerce grew and grew and grew over the next several years, states were seeing more and more of a hit to the tax revenue that they were bringing in. So in 2017, they came up with this idea of use tax notice and reporting. So what they're saying is, all right, if you're not going to collect sales tax, that's fine. But the people, so let's use the example of Colorado. So Amazon selling to people in Colorado. The state of Colorado is like, well, okay, if you're not collecting sales tax, somebody has to pay that tax. So the people who are using the products that they bought, since they haven't paid sales tax on it, they have to pay use tax. And, a bunch of you are accountants, everybody ignores use tax. Nobody's paying in the use tax. It's kind of like a voluntary tax almost, where they're like, well, how are they going to know what I bought? Well, this was supposed to fix that problem. So what they were saying is anybody who meets a certain threshold, they have to collect a bunch of information on the people that they're selling to, and then send out information to the purchasers by like January 31st of the end of that previous tax year. So it looks something like this. So this is what it is in Colorado. You have to get their name, their address, the total amount that they spent in Colorado, which anybody who's dealt with any e-commerce data, like it's hard enough to just get total accurate sales information, let alone break it all down by each customer, by each state, okay? But also at the time of the sale, when the purchaser, like they're just about to make a sale, Colorado says you have to have some kind of a notice that like pops up and says, hey, you're about to buy from us and we don't collect sales tax, so you're going to have an obligation to remit use tax. And as you can imagine, a lot of the people, like the sellers just aren't going to do that, because as soon as somebody sees something like that, they're going to leave the cart empty and they're going to go buy from somebody else. And then, like I said, by January 31st of each year, the seller has to mail out Like they can't even electronically send stuff. They have to mail out the annual summary of all the Colorado purchases made. So it's just this huge burden for small sellers in particular. Okay. All right. So then also in 2017-ish, states started going, if they weren't doing the use tax notice and reporting stuff, or maybe even if they were, they added another thing called economic nexus. So economic nexus is basically saying, hey, if you are selling X amount of dollars or X number of products in our state, then you're basically tied to our state. I mean, you're doing enough activity in our state that you should be collecting and remitting sales tax. So a bunch of states were starting to pass these things, and they were, a lot of them are commonly $100,000 or 200 transactions, okay? And this is why economic nexus is freaking people out. So let's use South Dakota, because this is the case actually that went to the Supreme Court. They said, okay, anybody who is selling at least $100,000 in our state has economic nexus and needs to register, collect, and remit sales tax and file tax returns. And according to the state, they're like, hey, okay, so a company with $100,000 in South Dakota, that's roughly $30 million in sales nationwide. That's a pretty big company. They can handle, they can afford to comply. But the problem that arises is they also have an or in that. So $100,000 or a transaction volume threshold of 200 transactions. So if your average sales, like your order sales is $20, that means you only need $4,000 in the state to be subject to these economic nexus rules. And clearly, $4,000 is a lot less than $100,000. So then the cost of compliance ends up being a huge portion of the business's sales. Now, this is just South Dakota. Imagine this multiplied by the 45 states that collect sales tax. Hey, Michelle, do you want to jump in and do a poll?
Yes, actually, I was just trying to ask you that, but I had muted myself, so perfect timing. Thank you.
Sure.
And I have a couple of questions for you here. First of all, and I know the answer to this, but I'm going to let you answer it and share your expertise. In an audit situation or in general, is the seller still responsible for paying sales taxes in the event the purchaser did not pay use tax?
Well, I don't think that they tie it one-to-one. Well, let me preface all this by saying I am not a sales and local tax expert, and you should definitely talk to somebody, especially because the rules are changing really fast. But I think there are just too many people that the states aren't going to go audit the use tax and then go back to the company necessarily. I mean, they could, but and I'll talk a little bit more about how they're going to find people in just a bit. But I think it's more realistic that they would go after the sellers for the sales tax. Did that answer the question?
Yeah. So I was also just going to share something. One of the things I always tell my small business clients, and I tell people in general, if a retailer does not collect sales taxes, and they were supposed to, regardless of the use tax issue, then when they have a sales tax audit, they are liable for all those sales taxes, even if they did not collect them. If people want to Google, it was a mattress company in Oregon or Washington, I can't remember which, but that company wound up going out of business because of a sales tax audit where they had not been collecting the sales taxes, and they owed millions of dollars in back taxes, and it put them out of business. So it is a really important situation to make sure you know sales tax correctly. And Paul confirmed that is correct. So somebody else said happens in New Mexico all the time. So, okay, I'm going to go ahead and close this poll question. Thank you, Patty. And I'll just share with you 47% collect sales tax or deal with sales taxes in one state, 16%, 2 to 5, and a third of the people said NA. Now, just because you're NA at this time doesn't mean you may not have to deal with this in the future, or you may not be aware of it. So, Patty, I'm going to go ahead and hide that, and you can continue on.
Great. So, and actually, I just want to kind of follow up on that poll. I've seen a definite trend, like since 2012, the e-commerce sellers we were talking to, they would be like, no, let them catch me. No, it's not worth it. I don't see anybody else collecting. I'm going to wait and see what everybody else does. And kind of slowly over the years, more and more people have been registering, more and more people have been collecting sales tax, especially with our clients because they're 1 million to 40 million in sales, so they're pretty big. So if they have a sales tax issue, they could be on the hook for a lot of money. So they do it a lot just for peace of mind. But since, okay, I was about to jump ahead to the Wayfair decision, but let's just jump ahead and start talking about the Wayfair decision. All right, so that brings us to the South Dakota versus Wayfair. They go to the Supreme Court. The Supreme Court hears it, and basically they say, just because you're an out-of-state seller and you don't have a physical presence doesn't mean that these states can't collect sales tax. So all these rules, all these new funky rules, basically what they're saying is it's up to the states. They can do whatever they think is reasonable, and it's up to Congress to come up with some laws to fix the problem. Now, I don't know about any of you, but generally speaking, I think there is low confidence that Congress is going to really take any actions to fix this in the near future. So this is hugely concerning for people. Now that the states have some teeth behind some of the stuff that they're creating, people are getting super nervous. So let's talk about how are the states reacting. Pretty much it's the wild, wild west out there. They are coming up with all kinds of stuff. They're passing laws like crazy, a bunch of laws passed like effective July 1st, August 1st, October 1st, pretty much by January 1st of the coming year. All the 45 states that collect sales tax, or almost all of them, will have laws on the books. And not only that, they are doing things like changing taxability of different products or services or whatever. And so everything is just, it's mayhem right now. And most of our clients, I'd say before this decision, most of our clients were registered in about 20 states or so. Now most of them are registered in 30 to 37 states, and probably by next year they'll just be registered in all of them and collecting in all of them. So so let's talk about, there's this thing called marketplace facilitators. So there's a lot of people ask the question, they know that Amazon recently has been collecting and remitting sales tax for people in Pennsylvania, Washington, and Oklahoma. And so people who are selling on Amazon are like, sweet, I'm in Pennsylvania, so now I don't have to worry about it. Done. And that's not, it doesn't really work that way, because what's happening is Amazon will collect and remit on just the Amazon sales, but what if that seller is selling on Shopify and BigCommerce and eBay? They still have to collect sales tax anywhere they have a store, because Nexus isn't a store-by-store thing. It's for their business as a whole. So they're having to collect and remit sales tax in these different locations, and Amazon is not filing sales tax returns on their behalf. So everybody still has to register. They still have to collect sales tax that's not being collected by Amazon. They have to remit what they've collected, and then they have to file a tax return. So it actually makes it a little bit more complicated, because instead of just one check to the government, now one payment's coming from Amazon and one's coming from them. The other problem is, for all these people who are sticking their head in the sand and they are not, they're just like, I'm just not going to deal with sales tax. I'm too small. Let them catch me. What Amazon is doing is they're remitting sales tax for all of the sales that they've collected sales tax on. So if you're not registered, now these states have a big old red flag with your name and address attached to it. So audits, I mean, they're going to so easily be able to audit people. Now, I'm not sure how much manpower they have to go out and audit the 5 million Amazon sellers that exist, but believe me, the people who are, they don't want to play Russian roulette with this. You know, they don't want to be the unlucky person who gets audited when Amazon like kind of throws them under the bus. Other issues. How many of you guys are selling services through cloud accounting services? And how many of your clients are all just in your state? One of the issues is services are taxable in some states. I don't think very many of them, but they are. So these nexus rules that we're talking about, they don't apply just to products, they apply to services too. So, so now anybody who's doing any kind of work like this, and anybody who's working with somebody who's in a different state than yours, has to be concerned about these rules and for yourself in addition to your clients. All right. And then, oh, good. I've been like talking so fast. I thought this was gonna, okay. I've got 15 minutes left. Yay. Online courses. So,
hey, Patty, though.
Yes.
Shall we go ahead and do one more quick poll question?
Sure.
All right, there we go. This is a quick and easy one, so you guys should answer as quickly as possible. And this brings up a really good question. You know, we've got a lot of people who are in service-based states, but what about subscriptions for software such as QuickBooks? I know that varies in a lot of different states. Patty, do you want to talk about that?
Yeah, that's totally true. I know in a general sense, our clients don't actually, they all sell physical widgets and not subscriptions, but I do know that it has different taxability like all across the country. So yeah, just knowing the rules for all these things is a huge headache for us and for our clients. I mean, no, it's just really frustrating.
Right. Yeah, some of the things that I have heard is, for example, you know, of course, you know, when I'm presenting across the country, I hear from various people in various states, and I never pretend to know what the laws are because I'm not a tax person to begin with, and sales taxes is way more complicated and a whole different ball of trouble. But anyway, when it comes to services, in some states, I have heard if, let's say, you're doing package pricing, let's say you're charging $1,000 a month for your services, and it includes QuickBooks or Bill.com or Receipt Bank or other, you know, third-party apps, then it makes your whole services taxable. I think that was Ohio.
Yep.
In other states, yeah, and so in some states you have to invoice for those things separately. So you invoice for your services on one invoice, and then that software as a service, you know, QuickBooks and other things, you have to invoice totally separately for, and it may be taxable. So it's really important that we as accounting professionals learn these laws because we may assume, well, services aren't taxable, but QuickBooks is different, and you need to know what the laws are. And that's where, you know, I love Avalara. You're going to hear from Matt in just a little bit because they offer all these great services, and Matt can confirm, but I think they also provide us as accounting professionals a free, you know, subscription to Avatax. So I'll let Matt address that later. But thank you all for answering this poll question. I got 93% of you voted, and 10% said true, 90% said false. And so, Patty, I'm going to go ahead and turn it back over to you.
Okay, great. All right, so online courses. This actually is, I think, how Hector, it occurred to Hector that you should have me on here. We were talking in, I think, his video marketing group on Facebook about online courses. And because I've been kind of living through this for the last quite a few years, one of the first things that I did when I set up an online course through Teachable is I went to figure out how to collect sales tax. And like in Colorado, they've got, like, if you're teaching somebody person to person, then it's not taxable. But if you have like an online course, then it is taxable. It's like crazy. Anyway, so I went to Teachable and I was like, okay, so how do I collect sales tax? They don't have the functionality to collect sales tax, even though it's taxable. So, so somebody was talking in Hector's group and saying, hey, yeah, that's why I use Teachable's payment processor, because when I use their payment processor, I become a 1099 contractor and Teachable becomes basically the owner of the course or something. I don't think legally, but you know. And I'm like, that doesn't even make sense. That's not how that works. And I went to their help section and lo and behold, that's exactly what they're saying. So the thing that I was concerned about is, okay, so Teachable, that's great. You're taking all the responsibility for the sales tax, but millions of dollars run through Teachable every year, and like millions and millions. And if they're not collecting sales tax, then the states are going to go after Teachable. And I don't know how long Teachable is going to be around. So now I'm looking for like another option to do this. And I know Thinkific is out there, but you know, it's like there are all these unintended consequences from the complexity of sales tax. It's just insane. So how do you advise, what do you tell your clients what to do? The first thing I tell them, go talk to a state and local tax expert. They can do a nexus study and find out exactly like what it is that they're selling and where they are and what things they have in different jurisdictions that's going to trigger nexus for them specifically. They can take a look at the products they're selling and what kind of taxability they have in different jurisdictions, and they can handle taking care of the registrations. We don't do registrations for our clients. It's a headache. The laws are changing too fast, and it's too much. So you need to really outsource this kind of stuff to somebody who loves doing it. And then we always tell our clients that it's a risk management decision. If you've got somebody who is selling, let's say, $50,000 each year, and they've got nexus in 10 states, it's going to be really expensive for them. I mean, a lot of these companies, they have razor thin margins, and the cost of compliance is just so high. They have to make a decision if there's like, they have to make a decision if they get audited, if the expense of the audit is going to be less than what it would cost to comply. You know what I mean? And as a CPA, always follow the law. I'm not telling you not to follow the law. I'm just saying that realistically, a lot of our clients, they choose to do what's best for them. If their budget, it's not in their budget to do things the right way, they take care of the big fish first, like maybe New York and Florida and Texas and California, and they get to the other ones as they grow and as they can afford it, you know. So, and then the other thing is, you know how much it costs to comply. You can figure out how much it costs each month per state to get everything filed, but you don't know how to put a price tag necessarily on the interest and penalties and what these states are going to charge you if you're ever audited. And then notice and reporting, it's just, if our clients are anywhere close to having to deal with the use tax notice and reporting, we would recommend just register there and collect sales tax. It's just too much of a hassle to not do it, you know. So that's what we recommend to our clients. Yeah. All right, so I've got, just this week, my team at Catching Clouds, they put together basically a summary spreadsheet of all the different nexus laws by state. We talked to a SALT expert to kind of double check our work. And it's all up to date, so you don't have to like go call up each and every state and find out what their rules are. It's just kind of summarized for you. So thought I would share that with you guys in case you wanted it. I know it's really helpful to us. And then I got some resources for you, and yay, I'm actually a little ahead of time. So let's see if you guys have any questions.
Nancy, a lot of questions just came in, and I have not been reading through them because I've been working on getting the handouts. But here's a real quick one. How do you find a salt expert in your area?
That is a great question. You know, I don't think you need to, you can look in your area, but probably what I would do is go online and find people who are contributing a lot to the discussion, the people who are doing webinars and stuff. I can tell you a few off the top of my head. Michael Fleming is really great. I think his website is salestaxandmore.com. Oh no, now the pressure. I can picture. I can picture.
Well, that's
like
okay.
3 of them.
Yeah, I was going to say for sure, check with Avalara because they provide resources. That's what they do is sales taxes. And Matt's getting ready to come on here in just a minute so he can talk more about this. But Avalara can help, and they even have, that's one of the services that they provide is helping you to identify, you know, do you have Nexus? Does this apply to you? Does this not apply to you? In addition to, you know, they've got Avatax, which fully integrates with QuickBooks, and Matt's going to talk more about that in just a minute. But Patty, here's another question for you before we get into that. And I will tell everybody, I could not get the slides to update. The handouts with the slides would not go in to GoToWebinars for you to download. I don't know why. So I got a OneDrive link, and I just posted that in the Q&A. So you can click that link to download and access both Patty's slides and the Avalara Matt slides in just a minute. But Patty, is Intuit collecting sales tax on wholesale QuickBooks users? Am I paying sales tax to Intuit?
Can you say that again?
QuickBooks Online. So those of us that are accounting professionals that are on wholesale billing, are they paying sales taxes to Intuit? Do you know?
I don't know for sure, but I would think if it's wholesale billing, then you have to collect sales tax from your clients.
Well, that depends on the state, I think, whether they do or not. But there's 5 or 6 people that just typed in, yes, I pay sales tax to Intuit. I pay, So 5 or 6 people just said, yes, they do. But again, that can definitely vary by state. But a lot of people in there are saying, yes, that they pay the sales taxes to Intuit. So that's great. Thank you. So, Patty, you are excellent. Go ahead. What were you going to say?
I was just going to say, I saw somebody asked if the threshold, the 200 transaction threshold is per month or per year. It's per year.
Okay, thank you. That's great. All right, I'm looking through here. A lot of them are saying, yeah, they pay those sales taxes. All right, Matt?
Hello,
Matt?
hello.
Yay! You know, we've got lots of questions for you. Patty, thank you so much. And please, if you can stick around, I'm sure we're going to have some more questions and love to have you a little bit later. But I'm going to go ahead and pass presenter to Matt and see if, Matt, if you're ready. You can hear we already been talking about you, and we need you. We need Matt. We need Avalara.
Sounds good. And thanks, Patty. That was wonderful. And thanks, everyone, for taking the time today. And I'm going to kind of circle back and talk about a few things that Patty talked about, as well as showing a demonstration here in QuickBooks to start. And really, when I hear all the information about what happened in the case in South Dakota versus Wayfair, it's everybody in businesses have always been reactive to sales tax, right? They've always just kind of waited, and now they've figured out, okay, I need to do something different. If I've learned anything in the past 60 days, it's truly that now's the time to be proactive as it relates to sales tax and as it relates to QuickBooks and working with companies and business owners and CFOs and contractors and whatnot. Now's the time to truly get ready and keep an eye on everything that is happening. So I have a page that I will send out. I'll put it in the link here in a minute, just Avalara's page that talks about South Dakota Wayfair. It's going to have some interesting information about states that already have economic nexus laws in place, and Patty talked about that earlier. And then it's also going to have some of the individual states and what their thresholds are potentially going to be, as well as effective dates. Now, I will leave with this. I'm just like she said, I'm not a CPA or a tax attorney. In no way can I give sales tax advice, but this is one of the pages that Avalara has put out there that we'll send, and we'll put in the chat box to everybody here shortly so you can take a look at it. So I'll send that out momentarily, and I'm going to walk through just a brief demonstration of what Avalara and what Avatax looks like in QuickBooks when you get it up and running. So one of the first things I'll show is on the file dropdown, you can actually see Avatax listed as a file menu item. That's going to let you know that Avalara is actually a gold certified developer with Intuit. We have what we call pre-built integrations. They're connectors. So we have a connector for manufacturing and wholesale 2018, 2017, 2016. We have it for QuickBooks Online, all of the desktop versions, enterprise as well. So we have pre-built integrations where it's simply downloading it, telling us what states you collect tax in, what your products are, and then Avalara can automate that whole functionality. So I'm going to put a customer in first. And this is just going to pre-populate some addresses. You'll see a bill to in Seattle, Washington, a ship to in Half Moon Bay, California. What's really important, and I'll put a few line items in. Number one, we'll put something that's fully taxable, a big computer or tangible personal property. TPP or tangible personal property is always going to be taxable. It really depends on, what you're actually selling, who you're selling to. If you're selling to a fully taxable end user and it's a tangible product, that's always taxable. The only time it's really not going to be is if they're reselling your product or their manufacturer, distributor, or if they're giving you a sheet of paper that says, don't charge me sales tax and here's why, right? So we'll put a couple other line items that have varying taxability. Let's say you're a software company and you sell a software maintenance contract, and then you're also selling software as a service. So what's really important, and whenever you go to save an invoice, and it can be done on an estimate, a sales order, an invoice, whatever, wherever you need sales tax calculated, here's where Avalara comes into play. On the back end, which I'll show you here in a moment, where you're going to tell us what states you have an obligation to collect tax in, or where you have nexus, as long as the ship to address is in one of those states, the tax item moving forward is going to be Avatax. That lets you know that your QuickBooks is going to reach out to our tax engine and we're going to be the ones to calculate tax. For example, in a state like Texas, where there are 1,485 taxing jurisdictions, that's 1,485 tax items you'd have to manage on an ongoing basis. Now, some states don't change every month. Some do, some vary, and it is very challenging. So depending on the complexity of the state, like for example, Massachusetts has a flat rate at 6.25%, you may not need Avatax to tell you that what you're selling, which is fully taxable in Massachusetts, is 6% or 6.5%. When you get into states like Colorado, Louisiana, and Alabama, and I put that in the chat box or in the question box here a minute ago, it is very, very cumbersome and very challenging. So as long as the ship to address is in a state that you've told Avalara you have an obligation to collect tax in, Avatax will be the tax item moving forward. And when you save that invoice, it's going to reach out to our tax engine, and in real time, we're properly assigning the rates, properly assigning the rules, and putting back a tax line item of total Avatax in under 0.2 seconds. There's a couple things that actually go into place and happen in that short amount of time. Number one, we actually take that address in the top right corner of Half Moon Bay, 501 Main Street, and we convert it to latitude, longitude. We're going to give rooftop level calculations. So, and I'll show one real quick slide here in a second, just to give you an example of how challenging it is. So we do rooftop level calculations as opposed to zip codes. Zip codes aren't always accurate. They're not going to determine if your line items are taxable, and they're going to truly lead a false sense of security that you're doing sales tax right. One of the guys on my sales team always, I hear him say it probably once or twice a day, is zip codes are more so for the mailman to deliver mail. They're not for calculating sales tax. So there's a lot of reasons why that they're not accurate. They're not going to help you with product taxability, and they're really going to make you feel like you're doing sales tax right. But this is what it looks like within QuickBooks. And I'll jump out real quick, and please type any questions in. I have a couple of these already pre-recorded. We can send them over after the call. And I'm going to jump into Avatax and kind of show you what it looks like on the back end, just so you can see really how granular our solution is when you're utilizing it and if you're needing help with tax calculations. So Avatax is our core product or a hub. We have number one, 3 main offerings that we can help with. We can do the tax calculations or determine the tax on your invoices. We can then also offer the full filing and remittance. And then we also have a third core product called Avalara Cert Capture, where we can help to store, maintain, validate, and manage the life cycle of exemption certificates on an ongoing basis. So I'm going to pull up that same invoice we just ran. And here's what you're going to see is all the detail. So you'll have the origin, the destination. You'll get a summary here of the amount, what's taxable, what's not. And then when I open this up, and California is not a really, really hard state. It is challenging. One of the things they've been trying to do is pass a law for the past few years to tax services. And if they do that, which they haven't, it's potentially going to open up the doors to about $500 million of reoccurring money, free money for the state. So back to the invoice itself. I mentioned earlier we do rooftop level calculations. At this ship to address in Half Moon Bay, California, you'll see these are all of the taxes that are applicable. You see a county, a state, a special district tax, and a local tax as well. We're going to take that composite rate, and on this particular invoice, it happens to be 8.75%, and apply that to that particular line item in real time. And we're going to do that for all three of the line items that you have on your invoice in QuickBooks. I'm not going to open all these other ones up, but you'll see here there's a software maintenance contract, as well as software as a service. The state of California deems the software maintenance contract is 50% taxable. So you see here, we only tax 50% of that line item. And then this description, which is vague, and I'll show you here in a second what that means, is just software as a service, is non-taxable. So part of utilizing Avalara is telling us what your products or services are or how you classify them. So we have thousands of these Avalara system tax codes, and again, we'll email this over to you. It's an open URL, where you tell us what your SKU or your item in QuickBooks is via our tax code lookup tool, and then we're going to, from there, decide, and we're the ones that are going to make the tax determinations on whether or not system software, implementation services are taxable based on the ship to address. We have thousands of these tax codes, and you just have to let us know what you're selling, and we will then be the ones who are going to determine across all states of the 46 that collect sales tax whether or not what you're selling is or is not in fact taxable. I'm going to run through a couple. Yep, go ahead.
Okay, can we pause 1 second for a poll question?
Yeah.
Okay, so I'm going to go ahead and launch this poll question, asking people how they currently calculate remit taxes. So, but I have a question for you, Matt. You were just talking about, hey, we tell it what we're selling. What if I don't know what category something should go in for sure? You know, if I'm going through and trying to help set up all my items, and I'm not sure, well, should I call this software or is this SaaS, or is it, you know, I mean, is this something that Avalara can help when people are setting this up? If we have questions about, you know, how to properly classify it, do you all provide that service? And I'm pretty sure you do, but I just wanted you to talk to that.
We can have a call, and you can purchase some time with basically our tax code mapping expert, but it's really hard for us to tell you what tax code to pick from a legal obligation where we can't give the advice. I mean, we can have a conversation. What I tell most folks are, you know, which of these three tax codes best describes the clothing you're selling? Are you selling general clothing? Are you selling bandanas? Are you selling belts and suspenders? You would have to pick that best describes that product or service. And if there's three of them that are very similar, again, they'd have to pick whichever one they feel best describes their product or service.
All right,
so
great.
Yes,
Thank you.
No, we can set up a call, yes, correct.
All right, great. Thank you. And we do have some more questions for you, but I wanted you to be able to go ahead and finish up your presentation, and then we do have some questions for you specifically. So those of you that have been asking some questions, we're going to get to those in just a minute, but let me go ahead and share these results quickly. 32% manually, 18% use something else, 32% use a combination, and 18% were in A. All right, thank you, Matt. Go right ahead.
Perfect. Thank you so much. And so we've talked a little bit about the calculations on the front end. On the back end, actually, Avalara can offer the full compliance suite where we can actually file the sales tax returns and handle the remittance as well. And it's as simply as logging in once a month or once a quarter, putting in your filing frequency, telling us what forms you're going to file, and then you just have to walk in and set up a power of attorney. We will file the returns. We will handle the remittance as well. All you have to do is log in, click a button, make any adjustments. Yep.
Matt, we're not seeing your screen for some reason.
Okay, sorry.
You still have control. Let me there it is.
Okay.
We can see it now. Thank you.
Okay, gotcha. So I just went into the return tab. Sorry about that. It must have done with the poll question. But this is where you would just log in once a month or once a quarter, depending on your frequency, and actually click a button. And we will file the returns for you on your behalf. And I'll open up a detail here just for Alabama. And this is where you'll see which return you have to file, the dollar amounts that are due, and we go ahead and guarantee to file them on time. We fill them out properly. We get any timely filing discounts, and Avalara's managed return service will actually offer a white glove to answer any tax notices that you receive from any states or local jurisdictions on your behalf. The last thing I'll show you in here is if you didn't want Avalara to file the tax returns for you because somebody at your company has done it for years and years and they're the only ones that have done it, just by using our calculation engine in QuickBooks, you will have access to all of our very granular reports where you could then pull a report for your previous month's worth of data. You will have hyperlinks for all of the individual transactions that are at those local levels, and you could utilize this simply to file the tax returns on behalf of your company as well. So this is what you get access to just by being an Avalara customer. Last thing I'll show here, and then I'm going to show one other thing, is in the settings tab. It's as simple as coming in here, clicking on where you collect tax, checking a box for that particular state, and then from there, Avalara will then collect tax, and whether it's your e-commerce site, whether it's QuickBooks Desktop and or QuickBooks Online. I want to pull one thing up here. I want to go back to the zip code versus rooftop, and it's kind of going to piggyback a little bit on what we were talking about earlier. So this is an example in Commerce City, Colorado. Now, Colorado is one of the harder states. This is the same zip code in the same neighborhood, in the same street. You'll see all the houses in blue have a tax rate of 9.25%, and then all the houses in green or yellow, however it's coming across, have a tax rate of 4.75%. That's almost a 5% delta from one side of the street to the next. This is truly why we say zip codes aren't always accurate and they're not the right tool for the job. If you are in some of those complex states, Louisiana, Colorado, Alabama, California, Texas, it is definitely worth the conversation to talk about automating tax within QuickBooks and speaking to a company like Avalara. So
that's
I'm going to
so crazy.
Yep, I'm going to pause here, and I'll send these slides out, or actually you already sent them out, and then we'll get this page. I'll put this in the box as well, so save this, and I will stop there because I'm sure there's probably a couple other questions we can answer as well.
There are a lot of questions, and you know, Matt, I am always telling people when I present, not only can different houses have different sales tax, like you just showed in that picture, which I would love to steal and use in some of my presentations, by the way. But also something as simple as like a Hershey bar is considered candy and has one sales tax rate versus a Hershey bar with almonds is now food and may have a different sales tax rate. I mean, these things are so complex, it's just crazy. And that's why I always recommend Avatax and Avalara to help people with this craziness. And we've had people from Canada bragging about how much easier theirs is up there. But we did have some people that wanted to know if Avalara or Avatax works in other countries. So would you like to answer that one, Matt?
Yep, so it really depends on the platform. In QuickBooks Desktop, we are able to handle global and VAT. We support, Avalara as a whole supports the US as well as like 189 other countries. So almost all of them. QuickBooks Online, if they are using online, is only going to be supported or calculate tax for the US and Canada. But for desktop users, enterprise, whatnot, we can definitely handle global calculations. Yes, ma'am.
Okay. And then somebody asked if you work with QuickBooks Online, and I said yes. Is that correct?
Yep, correct.
And what about Shopify? Do you work with Shopify? And what about QuickBooks Point of Sale and or other point of sales? Would you like to address that quickly?
Sure. Yeah, point of sale has always been a tough spot for Avalara because there's a lot of complexities with it. What a lot of folks will do is if they have a brick and mortar location, they'll log into QuickBooks either once a day or once a month and just run a single transaction so we can then have all of that applicable tax and dollar amounts for reporting and filing purposes. The first part of the question, Shopify. So Shopify, we actually have an agreement and a relationship with Shopify where the folks that are on Plus, so Shopify Plus it's a couple $1,000s a month that they pay to Shopify. We'll have our Avatax calculation engine behind the scenes working. If they are on Pro, Basic, or Advanced, the first 3 levels, not that higher upper tier, we just offer a prep and filing solution for those particular ones. We don't have an integration to the first 3 levels, only the Shopify Plus.
Okay, great. Thank you. Now, Matt, previously I had mentioned that you might provide a free account or free assistance to accountants that are pro advisors and stuff. Well, could you address that and clarify that, as well as do you offer partner programs or anything for accounting professionals? Can you kind of talk to that?
Yep, I'd have to check with our folks internally as far as what we do for pro advisors and other solutions as well. Typically, if we're going to work with a a QuickBooks user or somebody, we want to work directly with them. You know, heaven forbid they ever sever a relationship with their pro-advisor or something like that. So what I like to talk about is the folks that are collecting tax in multiple states, that are selling products and services or items with varying taxability. Those are the particular people we want to sell Avalara directly to and have that direct relationship, because as they scale and they grow, it's a better working relationship from who's actually utilizing the software. So I don't know if that answers the question, but I can check on how we offer as far as like you know, an account and whatnot, or a not for resale account. One of the other questions you mentioned earlier, and I didn't touch on this, but Avalara actually has a team. There are tax advisory services team that will handle registrations, nexus study, nexus monitoring, voluntary disclosure agreements, historical registrations. They're all former CPAs and tax attorneys. So, you know, starting a partnership with a small to medium-sized business and looking for a partner to help end to end is really where Avalara can come into play, and we can help as much or as little as they need.
Right, and so and that leads to another question. Somebody had said, you know, what is Avatax? So you were just talking about a lot of the services that Avalara can provide, and that's where we as accounting professionals, you know, somebody said, how do I find a salt expert? Turn to Avalara. You know, they're going to be able to help with a lot of these questions, but can you then go ahead and specify, you know, you just talked about some of those services that Avalara offers, but can you kind of then differentiate and explain Avatax to them? Because you demonstrated, you know, Avatax.
Yep. Avatax is our core product. Within Avatax, there are three main offerings. Number one, the calculations and determining tax on your invoices. The second part is the full compliance suite, where we can file the tax returns and handle the remittance as well. And then the third part of Avatax is exemption certificates. So storing, maintaining, validate, managing exemption certificates on an ongoing basis. So Avatax has three main offerings that are incumbent of itself. We have a lot of companies that will just start with the calculations and then eventually, you know, utilize the returns outsourcing to us. It's a la carte. You can do whatever you want. You can start with just calculations and or returns or certificates by themselves. Our plugin for QuickBooks starts as low as $50 annually. Meaning if you are a QuickBooks user in Florida and you just want us to calculate tax and you do 200 transactions a year in Florida, it's $50 a year for up to 250 transactions. So very cost effective. We have special pricing for the QuickBooks market, and those are the three main offerings within Avatax.
Great, thank you. And I'm going to go ahead and do our final poll question, Matt. So we're not done yet, so don't run away. But will this Wayfair decision affect your business or businesses you help with sales tax, and meaning you or your clients? Is this going to affect you all? And Matt, I'm going to ask you this question. I should have prepared you ahead of time, so I'm sorry if I'm catching you off guard. We've got an awful lot of questions that have come in that we're not going to have time to answer. And I you know, those of you that can stick around a few more minutes, Matt has agreed that he can hang around for a few more minutes, as well as Patty. So we can do a few more questions and discussion. But Matt, if I send you the Q&A after this, would you be willing to follow up with these people and try to help with their additional questions?
Yeah, 100%, definitely.
Okay, because some of them have very specific questions, and one of them said, you know, if we're using Avalara or Avatax, do we like follow up with you guys on a regular basis? And somebody else said, you know, I'd like one person who can work with us and our clients to figure out things. So, and you all also provide one-on-one demos and stuff and answering specific questions, don't you?
Yep. And I can put in. Let me see. I'm gonna stop sharing. I don't think my screen's not being shared, right?
Not right now. As soon as I finish this poll question, you will be. Those of you that still need CPE credit, we've only got about 83% that have answered this poll question. I'm going to give you about 5 more seconds. So CPE, poll question, please answer this. If you don't need CPE, answer it anyway, so we kind of know where you guys stand on this. So go ahead and answer this last poll question here. Those of you, I'm going to go ahead and give you 3 more seconds. 3, 2, 1. Done. All right, 43% said yes, 12% no, 36% of you are still not sure. So that's a lot that still don't know whether this is going to affect them or not. So that's quite a big number there. But we're going to go ahead and keep Matt for a couple minutes. Those of you that do have to jump off, I want to thank you for joining us. I definitely want to thank Patty for sharing her expertise, and Patty's going to stay on for some additional questions. And Matt, Avalara, not just for today, but for being a sponsor of ours. I can't recommend Avalara and Avatax highly enough, especially in this area. It's just a relief to accounting professionals that we don't have to worry about it, because a lot of people, you guys commented on how complex this is, and that's right. And we don't have to be experts in this area. We can partner with Avalara to help our clients get their needs met when it comes to sales and use taxes and this whole issue dealing with the collection and compliance issues when it comes to sales taxes. So hopefully you will reach out to them and follow up with them. So those of you who have to jump off, thank you very, very much. But Matt, if you want to go ahead and answer some more questions, we are seeing your screen. And Patty,
Sure.
if you want to chime in and add some things as well, please feel free.
Yeah, and one of the quick notes as some of the folks start to drop off, I mean, what is the ruling for South Dakota Wayfair now? One of the big things is now you really have to pay attention to all of your sales in all states, right? Again, there's only 46 states that collect tax. But what I would suggest, and what we've had people talk to us about, is that they now need to run reports every month and see what their revenue amounts are in each state, what their individual transactions are. So it's the best time to really just keep a better eye on, your total sales across the country. And if you're getting into some of those states where they're going to have those thresholds of either 200 transactions or $200,000. Like some of them, I think there's one that's just, if you do $250,000 of sales to a taxable product, then you will have to get registered in that state. I think that's Georgia. And there's quite a few. I mean, typically you're seeing $100,000 and or 200 or more separate transactions. But those are the big things you need to think about. I need to keep an eye and run reports and look either once a month or once a quarter at where are the most states I'm selling in. Am I doing over $100,000? And what I'm selling is taxable? Great. I may have to get registered in Maine or Louisiana or Iowa. Physical presence nexus still matters. None of that has gone away. There's just another level of complexity to where just by selling in that state, and as these states, like she mentioned earlier, the Wild Wild West, I mean, they can make up their own rules. And there's still a lot of things that have to happen in the court systems for all of these to take effect, but it's truly changing the landscape for the small to medium-sized business, and it's going to be a lot of revenue and a lot of money for these states, and they're going to be jumping all over it.
Wow, thank you. Now, Patty, if you're still on, I do have a question for you. Somebody had commented in here that, all these new laws and new changes is going to affect the industries and the clients that they work with in the future. Kind of what are your comments about, that aspect? What are your thoughts, Patty?
I guess I would say, I mean, it's a reality. So you need to deal with it one way or another. You're either going to take on that kind of work. If you take on that work, I would definitely recommend outsourcing what you can, because, nobody has the time to keep track of all this stuff. Use tools like Avalara and things like that. Yeah.
Good. Okay. So both of you, what is definitely like the number one takeaway or number one or what are some of the top things that you would recommend for accounting professionals, as we face this, this change and this big impact for us and our clients, like Patty, what do you recommend for people? I know you provided a list of resources and stuff, but what do people need to do, and what would you recommend for them?
Well, I think at a minimum, people need to just understand the basics and understand what the issues are. Whether they can whether or not they do the registrations themselves or do the filings themselves, that's like a separate question, but you need to understand how the landscape is changing and just the basics around sales tax so you can advise your clients and let them know when they're running into trouble.
Right, that's a good one. And, you talked about doing the registration themselves or whatever. That's one of the things where, as accounting professionals, I think we also need to evaluate, do I have the knowledge and expertise, to do this kind of stuff efficiently and profitably, or would I be better served turning to somebody like Avalara and Avatax who can help with this stuff? And, this is where a lot of times we want to save money. But yet, when you look at the amount of time that you're going to spend researching the laws, trying to understand it and all that, is that really what you want to do? Or should we turn to somebody, you know, like Avalara and Avatax with that expertise? You know, I personally...
You are not going to save money by not getting a tool.
I totally agree with you. Matt, what are your thoughts?
Yeah, 100%. I mean, it's one of those things. Sales tax is the lovely phrase of a non-revenue generating activity. I hear the phrase so often at Avalara: do what you do best and outsource the rest. And I'm a firm believer. I don't know how to fix a toilet. I would never try and do it myself. I would just call a plumber. Right? Now, one of the things we've also seen, and when you were speaking to the Amazon and selling on that particular marketplace earlier, of those 30 states where Amazon has a warehouse, 26 of them deem that third-party inventory is a nexus building activity. So when everybody gets off the call and you're looking at the slides later, look at those states that have the red dots in them for Amazon. By simply enrolling in the Fulfillment by Amazon program, you're potentially opening the door to have to get registered in 26 states. What does that also mean outside of that? That also means in QuickBooks, if you're doing phone orders or invoicing out of there, that's 26 states you'd have to calculate tax in for those as well. So it is very challenging. It's very cumbersome. Like North Carolina is a great example of four of those 30 that you don't have to. There's a sorting center in North Carolina for Amazon. It's not a fulfillment center. 3 of the other states are non-nexus or non-tax collecting. So New Hampshire, Oregon, and I believe Delaware have those particular, they don't require sales tax. So selling on Amazon is very challenging. If you're just selling on a marketplace, we offer a prep and filing tool where it's just going to aggregate and pull all of your sales data from Amazon and help you file and remit the tax returns. It's a little bit outside of Avatax. It's specifically for marketplace sellers, but it's worth a conversation. It's very challenging, and just simply by enrolling in the Fulfillment by Amazon program, you can be opening the doors to having to get registered in a lot of states.
Great. Yeah, and you know, the liability issue is so high, both for our clients and for us as accounting professionals. I mean, it just makes sense to turn to a professional and to get the help. So that's definitely. Now, Matt, another question for you, and then we'll definitely wrap up because I know we're going over time here. But this one is really important is, what about past tax? You know, let's say somebody hasn't been complying for the past several years. Do you all help with that as well on fixing and dealing with past problems when it comes to sales taxes?
Yep, and I'm going to I wouldn't call this a long-winded answer, but I'm going to explain it and I'd be happy to send some stuff out. So typically what we see and how Avalara approaches these, or our tax advisory services team, we do a $5,000 pivot point. So let's say you've been selling and you have, and whether you're on Amazon or you're just selling in general, and over the past X number of years, you have less than $5,000 of potential sales tax. We typically recommend a historical registration where we'll go back and file up to 12 returns in the arrears, get you registered, go ahead and get right with the state, and then file taxes moving forward. That's if you owe less than $10,000, or excuse me, $5,000. If you feel that you owe more than $5,000, like we have Amazon sellers that have probably done $1 million a year in California and they never collected or remitted anything, then we typically recommend a voluntary disclosure agreement or going through that portal or that program, applying to the state anonymously, aiming, and the goal is to limit that look back period and potentially reduce penalties, fines, and interest. Like we spoke with a guy last week. He had been selling on Amazon for 12 years and only ever collected or remitted tax or filed taxes in Ohio. We did a tax exposure analysis for him, and we estimated that the amount of money he owed across 20 states was about $650,000. By going through voluntary disclosure agreements in those states, we estimated it was going to get him down to about $250,000. BDAs are $3,500 per state if you enroll and have Avalara go through those. You can only do that if the state has never contacted you. If you got a letter from California and they're asking you about your business, you're not going to be able to go in that program. So over $5,000, more formal approach, $3,500 a state is our recommendation. Under $5,000, and a lot of people just say, hey, I'm going to go ahead and get registered. But one key note is when you get registered to collect and remit tax in the state, one of the first things they're going to ask you on that application is, when did you start doing business in that state? If you say tomorrow, And then the first month you do $500,000, that's a huge red flag, right? That's where, okay, the state's going to go, I don't know if that's accurate. So we look at it that way, and that's also our in-house tax experts that are going to help with the registrations, historical registrations, voluntary disclosure agreements, et cetera. A lot of people are just telling people to get registered, but it's scary because if you just get registered, they may never find you or come after you. They just want people to get registered moving forward. But there are companies out there that have done high volumes of revenue in states and could be in a real tough scenario. And I'll stop there.
Oh my goodness. Well, and again, that's why, getting the help from somebody who has that knowledge and expertise is just huge, because the liabilities and the financial penalties and recriminations just huge. So thank you, Matt, and thank you, Patty, as well, for sharing your expertise and helping us with this very complicated and technical topic, and changes just keep making it harder and harder. So thank you both for joining us today, and thank you all for attending another QB Power Hour. We hope to see you in the future or at QuickBooks Connect in San Jose this fall. Thank you again, everybody, and special thanks to Avalara and Matt and Patty Sharp as well. So thank you both. I appreciate it.
See you at QuickBooks Connect.
Thanks, everybody. Bye.
Bye-bye.